Well, good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new to this channel, every single day at 1 p.m. UK time, we drop an update just like this one to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets, which we are very much a part of. And that's exactly what we're going to be doing in this video. Bitcoin did sell off significantly over the past 12 hours, really overnight for me. We are going to be looking at this. The interesting thing about this sell-off is that it's occurring pre a week of very heavy economic data, which we're going to be looking at. We're also going to be looking at the Dixie. We're going to be refreshing, and I know it's kind of boringish macro stuff, guys, but it's very important for you guys not only to learn how to look at markets from a kind of 360 analysis point of view, but also to see if we can get any kind of clues about what our market might do based on other markets. And the Dixie, of course, is the dollar, basically. And when you're looking at Bitcoin, you're looking at it against the dollar. So a strong dollar is correlated with downside for risk, certainly since March 2020, and a weak dollar is correlated with upside. So we're going to be revisiting that. We'll be looking at the data. We'll start things off by looking at Bitcoin's price action. We can also go on to altcoins. Many altcoins. We gave 5 altcoins the other day that had broken out, and we said, look, be prepared for a pullback and a retest, which would kind of give confluence to potentially what the dollar, the Dixie, is setting up to do. So we are going to be looking at that, and then we're going to go over, and I'm going to do an entire video of this. We're going to be going over and we're going to be looking at VanEck's 15 crypto price predictions for 2024. So we've got a lot to get into. Let's start with Bitcoin, the god market when it comes to the crypto space. And I want to start off on the bigger time frames. We'll go even bigger to really put this pullback in context. You always get, and it's the nature of the space and it's the nature of marketing and life, you always get over exaggeration. This is the sell-off that Bitcoin has had. Now, Bitcoin has done spectacularly since our call in January. It's up nearly 155%. Okay, we didn't get in perfectly at the bottom, but the 5th of January, we made a call to get back into the markets with Patreon and then publicly. If you want to become a Patreon, do consider checking the link out in the description. We've had a huge uptick recently, and we are looking to do one-to-one sessions, an introductory session with people that's going on right now. So don't miss out on that. We won't be able to do it when the group is much, much larger, as I expect it will be in 2024. So we had a target from the start of the year that had derived from this inverse head and shoulders. And it took us to around about $42,000, which we absolutely smashed through. We did assess that once you'd cleared the 30K range, in very short succession, you were going to find yourself at the 40K mark. And of course, this is based on a number of things. Just looking at price action alone and not bringing up the volume by price, you can see the inefficiency here with price action. For some reason, the volume by price doesn't want to like me this morning. But if we kind of take a look, a bit of a deeper look at this pullback, we'll go down to the daily. In fact, we'll drop it right the way down to the 4-hourly. It's a pretty harsh pullback. You've got a double top that's forming here. I wonder where your target for that would be on the short term. Maybe there's a little bit of confluence here. You might have already sort of made target on this, if you can chart that. Small time frame double top, so we're not really counting it too much. But this was a substantial pullback. And the interesting thing for this pullback for me was this pullback has occurred going into a week of an insane amount of economic data. Today, we only have the Australian Westpac, but tomorrow we've got UK employment and we've got US inflationary data. Remember, rates, pricing of rates, the markets are very sensitive to. And of course, inflationary data is the guider of that, essentially. So we've got that on Tuesday. Wednesday, we've got GDP for the UK. We've got US PPIs, another inflationary metric. And then we've got the Fed's minute. Now, the interesting thing is Bitcoin sold off. And I think you're going to get the buy the dip brigade in here big time. But could this be a event that leads to maybe some sort of a flag-like structure before we set up for more continuation? It could. And we're going to come over to the dollar in just a second, really reanalyze the dollar and bring up its significance and look at where we think the dollar's heading, but what it might do in the short term may support the move that you've had here to the downside. So just to finish the week off, we have already looked at this. On Thursday, you've then got the Bank of England rate decision and the ECB rate decision, and then jobless claims for the United States. And then Friday, you've got UK PMIs, US Empire, and US PMIs. So it's a heavy, heavy week, which is interesting to me that Bitcoin going into this week has seen something like this. And again, to put this into perspective, this doesn't by any stretch of the imagination throw off the broader uptrend. But in the short term, and really what we'd like to see is some sort of a pattern that sets up for continuation. It's hard now that our target's been met, and until we form some kind of, further maybe inverse head and shoulders on a really big time frame now, where we get some sort of continuation pattern. It's hard for us to predict higher technically. We assess it's an uptrend and the market is going higher, but we need some sort of a technical pattern to anchor on here, and we've not got that yet. But Bitcoin selling off like this, going into a week of big data. But look at the wick on this. This has been bought up exceptionally fast, so this could just be an entire liquidity grab. However, I do want to stress that with such a week of economic data, the dollar perhaps is setting up for further upside. Now, what I want to do before we get into the dollar and a pattern on the smaller time frame is kind of reiterate why the dollar is so important to watch. Well, it's because it's the adverse trade to risk. So if we throw on Bitcoin, a US equity, or the main US equity, things like the bond market, we can throw up a housing ETF, and we can even put gold on here. You can see the correlation with these markets. So this is a monthly time frame, probably best to show you on a weekly. It's a very crowded chart. We'll stick all these in log. But what we're showing here is what we're determining as a basket of risk is the other side of the trade to the dollar, okay? So very quickly, risk down was driven by a strong dollar. Interest rates going up, so on and so forth. And then dollar down coincided perfectly with the bottom of the market. And then coming into more immediate time frames in regards to where we are, you can see that risk really got hit on the back end of a strong dollar. You guys will know that we speculated the dollar was going to turn based on this candle here, a real spinning top, and it has gone in that direction. And this has allowed risk, which had been pinned under a macro headwind on the back end of the dollar down, to do this. And we had speculated on all this, got it very right. But what's to come now? So we're looking at more of and we'll get rid of all this very quickly, not to waste anybody's time. We're looking at the dollar being in more of a macro downtrend, which is supported, I think, by rates being priced out and so on and so forth. So this is the downtrend, or this is the level. We think the dollar's just basically in a big channel, and that it's likely going to come to the downside here. Remember, we have a bullish narrative for the next year or so until a crash occurs, and we'd like to see the dollar do this. But in the short term, with all this data coming out, with such a significant move for Bitcoin that could be on quite thin liquidity, which is something definitely to bear in mind. And we're very cautious, I believe, about calling sustained pullbacks in this market because the trend is up clearly. However, there's a number of things that I'm looking at right now with all this news, with Bitcoin doing this, and with the dollar on the short term potentially finding some sort of a short-term bottom. You could be looking at the dollar actually seeing a bit of strength with all this data, certainly after the Fed speech on Wednesday, and going to press higher instantly. Where am I wrong? And we roll over. Well, you take out what could be a right shoulder. So this is your left shoulder. Let's just put this in here. This is your head, and this is your right shoulder. So this is going to give you roughly a projected target to around about 105 for the dollar, so significant. And then coming right back up the time frames to look at this, it means that the Dixie's essentially going to do this. So that's going to be a real headwind for Bitcoin if this plays out. Again, at what point are we wrong? Well, you run that low. I think that the Dixie's ultimately in a further downtrend, but whether it rolls over here or whether it pushes higher before then rolling over again, is to be seen. So this is something to watch. And of course, for risk, if this goes up, risk is going to sort of somewhat not do too well. This is all happening, all this data, at a point where you've got the stock market, which we've called beautifully this year, at some pretty significant resistance. If the potential for the Dixie to do what it does is going to be wrong, it's going to be 180 degrees wrong, and this is going to really push through. But look at the key significance of where the S&P is right now, i.e. US equities. You got the dollar potentially setting up a pattern to move higher. You've got equities at resistance across the board, pretty much. You know, looking at the NASDAQ, it's at all-time high resistance. So you will push through this. The question is, do you need a bit more of a break? You know, and of course, gold, after taking new all-time highs, got a real harsh slap, and maybe wanting to consolidate for a little bit longer. So it's all about the Dixie for me, and this potentially playing out. That's going to mean headwind for crypto. Ultimately, for me, I'm in a very good position. You know, I am very happy with the bags that I've got. You want to find out what my portfolio is, consider becoming a Patreon. But would also welcome some sort of a further pullback in correction. And just to correlate a little bit more with potential Dixie weakness, potential little bit longer pullback for the crypto space, we did highlight a number of altcoins the other day that had broken out. It's very, very common with a pullback, or with a breakout, that you get a pullback. Very common, and we've not seen any pullback here. So it doesn't have to come right back to the resistance level. It may fall short somewhere in the middle, but this would actually set up further continuation for the likes of Cardano. There was loads that broke out that we showed you the other day. AVAX, you know. But at the same time, this is a bull market, and don't expect too much. So just a word of warning, with such heavy economic data, that we could be looking at a further pullback across the board. The dollar might want to run a little bit higher. That's going to provide a pretty ugly environment for risk generally, which is all kind of at resistance levels. Bitcoin's done very well. Altcoins just broke out on momentum. Now uptrends are going to incur, but you might need a retest before you sort of continue on to that higher ground. As we're running out of time, we'll just quickly skim over the article that we published on VanEck's report covering 15 crypto predictions for 2024. It was very interesting. It talks about US recession, which we think they're going to be wrong on, and that's going to come in 2025 or potentially back end of 2024. Talk about spot ETF. They talk about non-fungible tokens coming back with a bang. Solana outperforming Ethereum. Emerging of a leading blockchain game, Bitcoin yield opportunities, decentralized exchanges going to all-time highs, stablecoin market cap reaching new all-time highs, so on and so forth. So we really like this. I'm going to do an entire video just based on this later on, so do keep an eye out for that. So to summarize the entire video, Bitcoin got hit pretty hard overnight. That's going into the back end of a very heavy week for economic data. The dollar might be setting up for upside, which is going to provide a not so nice environment for risk, which all seems to be at resistance. So there is the scope for that. However, this being said, any pullback that we get, in my opinion, is an opportunity in what is a broader uptrend for crypto specifically, but also macro environment is uptrending for risk. And the dollar, even if it does want to make those high targets, we do think will roll here. Will roll once it's made that target, or it might get somewhere close. However, we could be 180 degrees wrong, and at resistance, you could easily just push through it all and go higher. So either way, I think for the people that follow this channel, it's a win-win, whether we get that pullback that we can load up a little bit more on, or whether it just rips. You know, I think we're all well positioned. So that's all I've got for you in this video, guys. Kind of a 360 analysis of the overall markets. And yeah, have an amazing week. It's just started. It's Monday, and I'll see you all in the next one. Thanks for watching, guys. See you in the next.